Hello, ladies and gentlemen, and welcome back to another video. Today we have a new GameStop stock model and update on what Richard Newton has kind of been working on behind the scenes. First things first, this is not, never will be financial advice. Anything I say in this video is strictly opinion content, and I am most certainly not and never will be a licensed financial advisor. With that understood and out of the way, let's dive into something very, very interesting here. So, post on X, Richard Newton, by the way, and he was not hacked. So, before you come clamoring in with this, that, and the other, he's not hacked. This is his account. He's posting. Let's just get that out of the way. He basically, higher level here, has declared the model dead. And it's not DOA, meaning it's completely over, it's done, none of this is going to play out. There are various new inputs, and I have taken those inputs and kind of outlined them for you in terms of the most important things. And in addition to that, we'll go through his whole post here in a minute. This might be what Roaring Kitty was signaling with his 109 420 Time magazine cover, which again is tinfoil, but we'll get to that. We'll save that for later on in the video. The same effect with the Ryan Cohen infamous tweet of "I challenge Warren Buffett to a thumb war." Those things might have a bit more clarity now. So let's get into Richard Newton's post. And again, real quick, I just want to say that this does not mean that his model is thrown out the window, gone, broken, done. It means that it missed some critical swaps, which is not his fault. It's no one's fault. It's just you have to be very, very extremely nuanced in uncovering these things for them to appear, because the data is extremely hard to find. So essentially he's saying here, and I'm just going to paraphrase, but that this price action on GameStop from basically October 2 until now has just not been reflective of what's going on in the broader market and with the stock itself. It doesn't tell the story of a company that has 5 profitable quarters in a row. And again, I'm using my words now. It's everything that we've been saying. You don't have to be, an aficionado to understand that this is bizarre price action, to say the least, with a company that has some prospects of turning the business around and, in my opinion, is already doing that. So essentially, why is that price action happening? Swap theory. So that's what we've been saying. We've said that these are probably 2 swaps in this area. The amount notional we'll get into in a minute, but that this is not typical of what you would see. Now, this is very typical of swap behavior. And let me just point out something I think is critically important. So a swap down right here, this price action from the exact day being October 2 until the 22nd of October, pretty much straight down, right? They are building out a hedge here. You gain synthetic exposure to the underlying. It's a great way to cover up a short position or take on a new short position without any regulation of reporting this to the financial regulators. So you can have a huge short position here, OTC, don't have to report it. Isn't that convenient? So here you go, straight down shot, but then we get immediate relief. And this is also, when the whole White House, it wasn't really the collaboration, it was more of a social media collaboration, I guess, between GameStop and the White House happened. The console war, the great end of the console war, but immediate 10% rip in price, seemingly for no reason at all, right? That's likely because that swap finished the roll right here on this exact day, this exact moment, low volume, blah, 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 immediate pop up in price. Well, following that pop, we got another slam down. Why? You would think that if you're looking at the balance sheet, if you can read financials, that GameStop stock might be appealing in this range, right? Typically, if you're looking at TA, bounces up from there, it's a good range to buy, right? You could be thinking these things, and I'm not suggesting that. I'm just saying that this is probably logical to assume that anyone that can read a balance sheet would say this is probably a pretty good deal with the amount of GameStop's cash they have on hand. But it doesn't work that way. So another huge slam down here, likely another swap roll. Now, when does it exactly end? You can't say for certain. Now, you can guess that maybe 11.11 was the end of that, but we'll see. We'll have to look at volume. We'll have to look at how price springs out of here potentially, and if and when it does. Now, going back to Richard Newton's post, A swap is an off-market bet, right? You don't need to report it. We get that. It's a contract. Could be, this is an important distinction too. While the swap contract itself, like an options contract, isn't for shares, hedging of the contract results in shares being bought or sold on the open market. So essentially why you're seeing that straight slam down in price, enter the swap. Why? Typically the swap is a bet on the underlying, either long or short. In this case, we know which one it is, for the total return performance minus dividends or interest rate and premium paid. However, it is possible, and this is a critical component of this, that the swap contracts in this case are to cover a short position and not close it. The swap makes the short party whole on paper so that they aren't naked short the stock they sold years ago. So this fits into the legacy swap narrative. I think it fits it perfectly. And again, and just a quick interjection here. Let me know in the comments below if you're interested in swap theory, if you think this has some legs. And we'll get to the tinfoil and fun stuff in a little bit, but I think this is probably what's going on. And I also want to be perfectly clear. This doesn't mean that, now GameStop is free to ascend in price rapidly. I'm going to buy calls. I'm absolutely not going to buy calls. And I think this is the reason why, because predicting these exact moments in time or dates, or if they're going to continue to roll these swaps, is next to impossible. But let's keep reading here because this gets really, really good. The likely reason the stock is aggressively sold down over many weeks is to prepare to renew or roll the swap out another amount of months or years. The lower you can push the stock down, the more favorable the conditions are on the renewal. So it makes perfect sense why you would want the stock low to do this, especially if it's a large amount of money being placed on the swap. So the signals we saw leading into November 7 were likely the party forcing the stock down to prepare to renew. Well, that fits with the narrative here, right? We're forcing right here, and this may be locking in the contract and then maybe some instant relief. Again, we will see. This is not the point of the video for short-term price action. Not that I'm looking at decades and centuries, but there's something clearly much bigger going on here we'll get to in a minute. So with the renewal window, you're likely seeing multi-day VWAP orders hit lows. That's all fine. You don't have to be, again, a genius or a financial analyst or a TA guy to understand that this is abnormal price action, right? That's essentially what that's saying there. So swap theory crushed down, swap is rolled, pop in price, swap again, pop in price, and then refill. Okay, so let's fast forward now a little bit. Where did Richard Newton's model go wrong? Well, accurately predicting the price is next to impossible, but he tried a different approach of a yellow, pink, and red star, which worked pretty well from the last year, kind of November 2024, until almost a full calendar year to September 22 of 2025. So that was, if you remember, I have these on my chart, these little 6-month rolls, roll, 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 slam down, roll, slam down, roll. But he missed two gigantic ones that we have been talking about this for a few weeks, and it's not he said, she said. It's really just pay attention for these probably bigger amount in notional that you go back to. You can see them here in 2023. Could they have been 2-year? Maybe. And then they hit again right here. So the same type slam down in price, aggressive slamming down. This time it was 40%, right into a swap roll there. Now, you'll probably looking at my chart. I have a huge orange one on here too that I think could be the reason why Roaring Kitty put that 109 timestamp on his Time magazine cover. We'll get to that. So post-warranty appear to have 2 swap renewals, October 22 and November 11th. So let's just look. The dates corroborate. There's the 22nd at the end of a slam down, pop up in price. November 11, which would have been Tuesday. We'll have to see how the stock behaves from that point. Is it free to run? We'll see. As of recording this, the stock is green. Will they renew? Questions now. Will they renew another between now and earnings, or is the swap season over and now GameStop can run a bit? Or are they going to keep forcing it down like they did through late 2022, and that price action was terrible, and force us down into January's OPEX? So everyone wants to know where the stock will go. He's essentially saying you can't do that. You shouldn't play options, in his word. And again, I just want to say that for the person that did, I forget the guy's name. He made a YouTube video. It circulated pretty well, got a good amount of views. He went super aggressive, short dated calls. Those things are probably worth nothing right now. Probably went to zero. That's a few $100,000 down the drain. And I'm not judging that person for doing that, but that is why on this stock like GameStop, where, you can be the best person in TA in the world. You can be the best person with looking at options flow in the world. You can be all these things. swaps clearly have a greater force, and I have a full checklist of things that I think are the most important in sequential order that are far greater than those other things. Now, I'm not saying TA is not important. I say this frequently. It's important. It's a piece of the puzzle, but clearly there's something bigger here. And banking on, ETF creation and redemption, which is on my list too of things that are important, it's not the same as these gigantic swaps. So how big are they? Before we dive into that, I just wanted to say that this post here too is really good. BA Trader, that stands for Badass Traders Dorito Theory. That's the Dorito of Doom. I have it drawn on my chart here. Dorito of Doom, he was talking about 3 years ago, basically that this is just one big Dorito playing out. GameStop will not squeeze or have crazy price action, and hedge funds are very susceptible to going under when it breaks out of this Dorito. I have another one drawn on my chart here from the Roaring Kitty return. It goes out until about April 20th of 2026, if this is right, and it nearly broke. Also very important, the Dorito of Doom nearly broke before that bond offering in early June. So at the end of May, this thing almost ripped through it. And who's to say if that would have been the line in the sand, if hedge funds would have gone under? We don't know. We can't, we can speculate, but we don't know. Point being that theory, and I'll pull up the original Reddit post addressing the Dorito of Doom, highly suggest everyone flips through this. Quick little summary. Dorito is born when an uptrend forms, and then it either breaks down or below. If it breaks above, that's when boom, boom, bang, bang fireworks typically go off, and you could see some serious financial duress, probably. We can speculate anyway, from hedge funds. So credit to Badass Trader for that original theory that's really proved true to this day. So let's skip down now to where I think the most important part of this. He does address that the model is wrong, but in my opinion, it's really not wrong. It just missed two big swaps, which, I think we can be somewhat understanding of. And he's saying he does not know what's going to happen moving forward. Okay. So again, this is just not possible to predict price options on this stock. You'd have to be as good as Roaring Kitty to understand settlement and things of that nature. This is the meat and potatoes. Everyone should pay attention right now. He's saying, I had often asked the question, how long are these swaps for? Meaning the duration of them. If they're 6-month duration, that would mean that there were only 3 or 4 swaps. But if there are 1, 2, or longer year duration swaps, that means there are a lot more, hence the 2 ones that he missed, possibly many more. And if each requires this much forcing down in price, the huge slam downs, then how big are they? My current guess, and this is Richard Newton's words, is there are 6 swaps due each calendar year. That's yearly. And then there are 3-year duration swaps as well. So 18 legacy swaps in total. How big are they? 40 to 80 million shares each, or, and hold on for this one, 700 million to 1.4 billion shares in hidden shorts covered over by paper. That is really, if you believe this theory, if you don't, that's fine. If you do believe this theory, that is substantial. What would happen if one of those closes? Use your imagination, use your best guess. I think we would know it would involve some sort of 4th of July-esque fireworks. So what have I been working on? Well, I have used a lot of, and I credit Richard Newton for a lot of this logic. A lot of the people on Reddit too that predate Newton deserve all of the credit for this. It'd take too long to list those names. Point being, this is just a summarization of the most critical points, and there is 5 that I will tease here of what's going on, and not in any way, shape, or form what's to come, but what is the most important aspects of GameStop stock, and how can we best guess where things could go and interesting times by using this. The first is swaps. So rough calculations here, 11 million shares per swap, 11.3 million shares per swap. That is just based on Richard Newton's math, 5 to 6 per year. That would mean about 56 to 60 million shares per year are involved in swap rolls. So again, when you know that Roaring Kitty's, 9 million share position really can move the stock one way or the other, think about how this would affect the stock. It makes Roaring Kitty's position look dwarfed in comparison. Now, the bond offerings, where do the bond offerings come in? Well, that's 132 million shares if all bonds are converted into shares. I find that very interesting because that really just takes two swaps, maybe two and a half, depending on their size, out of the equation. That bails out two people if that's how they wanted to get out. I'm not saying that's what happened or Ryan Cohen bailed them out. I don't think he did. I think they're much more in deep trouble. Let me know if you agree in the comments. 18 legacy swaps for 700 million to 1.4 billion shares short. That's per Richard Newton's guess. So the January 9 tin foil, why do I bring up that date? If you look on the chart and you look, this is the most important. There are two very important things right here. This is a time period from November 22 of 2021, right? GameStop's kind of just going in these T plus 35 cycles, boom, 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 settlement, settlement, settlement. But right here, the moment that this breaks and a significant 50% drop in price ends on what date? January 6, 2022, effectively January 9th, right? Because you get a huge pop in price there. But right here, so huge swap ends here, you get an immediate rally in price. Immediate. And you can say, oh, news cycle, this and that. That doesn't fit the narrative here. So let's not even go there. Immediate pop up in price. Why do I say that? Huge slam down and then following an immediate pop. This must have been, in my opinion, a gigantic swap. Now, what happened? Let's go out another year. January 9, same thing. GameStop's doing pretty well, trading sideways, whatever. Slam it down close to 50%, aggressively shorting the stock day after day after day on like no volume. What happens? January 9, 10, boom, pop, 50% up. Okay, so I think there is a gigantic swap around January 9th that they might be rolling, they might be renewing. The cadence looks a little unclear. This is a working theory. You saw something similar in 2024, though. Boom, slam down right into that same time frame. So is it going to happen this year? Did it happen last year? No. And that's very interesting. Now, the market was closed on January 9th for Jimmy Carter's Memorial Day. Tinfoil or not, I mean, whatever. You know, let's not even go down that rabbit hole. But January 9th, I think, is a significant day for a potentially massive swap roll. How do we know if they're going to roll it or not? We don't. And that's part of Richard Newton's thing here is we don't know. We don't have the answer. I have a quick graphic on equity swaps for anyone. If you don't know what they are, watch my previous videos. Look at my X feed. I talk about them pretty frequently. It's essentially a derivative contract between two parties involving in the exchange of future cash flows with one cash stream based on equity-based cash flow, such as return on an equity index or underlying stock, which is GameStop, while other cash stream depends on fixed income cash flows, whatever. The advantage of these things is that you do not have to report them. That's the advantage for the hedge funds. And the other advantage is a synthetic position to a stock as well. In this case, probably a short position on GameStop. They listed the disadvantage here if you don't need to report this stuff, OTC derivatives. That would be a total advantage for a hedge fund or someone that's significantly short or close to underwater on GameStop. The second most important thing, and I'll gloss over these, not because I'm not going to go into in-depth here, but just because on the scale of importance, we'll gloss over these. We'll do more in-depth videos on each one. But for the sake of all your attention spans, fails to deliver. We're currently missing the data for them, but they're still extremely, extremely important. They exist across various ETFs. You know the name players, XRT, IJH, IJJ. Anything that contains GameStop currently or has in the past, you can go in there and grab GameStop shares from and short the stock, or fail to deliver, in this case, fail the stock. Don't forget GMEU. The thing's been on Reg Show 4 or 5 different times since its inception 5 months ago. It's ridiculous. T35 cycles have been confirmed with the Bruno research paper. Don't take my word from it. Literally read the white paper. It's certified. It is confirmed. It's legit. These happen across ETFs, and of course, it all involves GameStop. And special trades can exist with ambiguous settlement rules. This is per the official rule book. You can kick around to my opinion and how I'm making sense of the rules. You can mark special trades in the back end and kick these things around until forced settlement occurs. The third most important would be ETF creation and redemption. There is a great paper from McClellan Financial Publications on this available for anyone to read. It involves various ETFs. Take SPY, for example, which is theirs. extreme correlation between creation and redemption for market tops and market bottoms. Now, the same can be said with redemption of XRT on GME. When they super redeem XRT shares, the shares outstanding get super low. That typically lines up with lows on GME. The fourth most important thing that I think fits into this new model is the borrow fee and lend pool. Again, this is something that you cannot predict price from, but you can get an idea of if they are still aggressively trying to short something. It fits in with borrow fee. It fits in with the shares available. This is with swap theory in general, if these are super elevated fees, it might be a big swap roll. It might be a period of high fails to deliver if they're borrowing shares from the lend pool. It goes hand in hand with those things, and it's worth keeping an eye on every single day. The last on my list is TA, and I want to make crystal clear. I think TA is important, but when you have things potentially, 741 million shares short, 1.4 billion shares short, you can be the best person with TA in the world, and it won't do a darn thing. Now, what's worth keeping an eye on? The Dorito of Doom clearly is interesting. The theory proved true from the original one here, from 2021's squeeze, whatever you want to call it. When it broke, and GameStop, obviously from this point here, 300, 400% run. We'll see when this one breaks. It got close once. If it breaks too far below it, we're also in trouble. Don't forget the downside here, right? Let's respect the bear case here too. PMO. I talk about PMO a lot. It's a roaring kitty thing. Look at the daily PMO. I look at the 4-hour too, not with the same level of importance, but we just got a 4-hour cross to the upside on GME PMO with extended hours turned on. That typically looks for short-term price action swings and trends. It looks like we might be getting one to the upside now. So now what? Well, now that we kind of have a new idea of working theory, we can make a calculation model and put these inputs in to have some forecast of potential price action. But we know with Richard Newton's previous model, it didn't work out. You cannot make financial decisions on this. I am going to try and put this into a calculation. I am not the best with math. I would leave that to people on Reddit, Richard Newton, other people. Above all else, wait and hope. It's a famous line from a Monte Cristo book. If you know what that novel is, The Count of Monte Cristo. I'm not saying that there's no positive outcome here. I am extremely bullish. These things make me infinitely more bullish on the stock, knowing that this notional can be so high on swaps that when one of those parties says, I can't do it anymore, I've had enough, I'm out, I tap out, there could be some things exciting to come. The last is perseverance in suffering until intuition comes true. At the end of the day, we are using our intuition to figure these things out. It's worked relatively well in the past. We'll hope it comes true. We have to persevere because Ryan Cohen, the proof is in the pudding now. The company is in a much better financial state than it were a few years ago. Ryan Cohen is closing stores. The business is becoming more profitable. The next thing that they need to do, increase revenue. I think we're starting to see that with power packs and collectibles, but we will have to wait and hope that that continues. The same with these swaps. Someone's going to blink first. Who's it going to be? And no, to answer a general question, I do not think it will be decades and centuries. And I think the good guys, kind of David versus Goliath here, will prevail. I hope that helps. Please get some good comments going in the discussion, or some good discussion going in the comments below. I want to hear your guys' thoughts as well. In the meantime, until the next video, I hope everyone's doing well. Take care.